Welcome back. Today we're diving into something that might seem, well, a bit confusing. We're seeing reports of record-high global rice production for 2024-25.
Yeah.
Great news, right?
You'd think so.
But at the same time, rice prices are still really elevated. It feels contradictory.
It absolutely does. It's something a lot of people are asking about.
So we've looked at the UN FAO data, the Food and Agriculture Organization, and some market analysis to try and unpack this.
Yeah, let's get into it. The production side first, maybe.
Sounds good. What are the numbers telling us?
Well, the FAO figures point towards a global paddy production record, something like 543 million tons expected for the 2024-25 season.
543 million tons. That sounds like a lot.
It is. It's a significant amount, largely driven by really strong crops expected in India.
Okay.
And also favorable weather, good monsoons, basically helping out places like Cambodia and Myanmar.
Right, so good weather in key regions.
Exactly. Globally, it looks like around a 1.5% production increase just in 2024, mostly thanks to those strong South and Southeast Asian monsoons.
Okay, so the production story is positive. Record highs, good conditions. But then there's the price puzzle.
That's the core of it, isn't it? Despite all this extra rice being grown, global prices, well, they didn't really drop as you might expect.
How high are we talking?
Even going into the first quarter of 2025, prices were hovering around, say, 25 to 30% higher than the 5-year average.
Wow, 25–30% above average. That's substantial.
It really is. The FAO's own food price index for rice actually peaked back in mid-2024, and, it's stayed pretty high since then.
So the disconnect is clear. Plenty of supply, theoretically, but prices remain stubbornly high. What's the main driver then?
I think the single biggest factor, the one everyone points to, is India's export policy.
The ban on non-basmati rice exports.
Precisely. That started back in 2023 because of their own domestic price concerns, and it just kept going right into 2025.
And India is a major exporter, right?
Huge. You have to understand, India usually accounts for something like 40% of the global trade in, let's call it, the lower cost or standard rice varieties. So when you pull that massive chunk of supply off the international market,
it creates a major shortfall.
Exactly. It puts immense pressure on the remaining supply and pushes prices up everywhere else.
Okay, that makes sense. That's a huge piece of the puzzle. But surely it's not just India's policy. Are there other things contributing?
Oh, absolutely. It's rarely just one thing in global markets. Climate volatility is another key element.
How so? Even with the good monsoons overall?
Well, yes, the overall production was good, but remember the El Niño conditions back in 2024?
Right.
That caused some significant planting delays in parts of Southeast Asia. And even if the current harvest is okay, those delays created nervousness, uncertainty about future output in 2025.
So fear about future supply also impacts today's prices.
Markets hate uncertainty. So yes, that definitely added some upward pressure.
What about costs? The cost of actually growing and shipping the rice.
Good point. While things like fuel and fertilizer costs have come down from those crazy peaks in 2022.
They haven't gone back to pre-crisis levels.
Not really. They remain relatively elevated. And those higher input costs, they filter through the whole supply chain, right? From the farmer to the shipper to the retailer.
That eventually to the consumer.
Eventually, yes. That contributes to the higher shelf price.
Okay, so we have the export ban, climate jitters, persistent higher costs. Anything else?
Yes. Currency fluctuations and inflation played a role too, especially for importing countries.
How did that work?
Well, in many African and Asian nations, their local currencies weakened against, say, the U.S. dollar.
Right.
Which means paying for imports, including rice, just got more expensive in their local currency terms.
Even if the dollar price stayed the same.
Exactly. And on top of that, some governments in these regions actually cut back on subsidies for essential goods, including rice, which directly pushed local prices higher.
So a double whammy for consumers in those places. Higher import costs and less government support.
And there's one more factor often mentioned, stockpiling.
Stockpiling. You mean like governments hoarding rice?
Sort of. In 2024, we saw a noticeable trend of both governments and large commercial buyers increasing their rice stocks.
Why were they doing that?
Likely as a hedge, trying to secure supplies amidst all the global instability and uncertainty, the export bans, the climate worries.
But that buying activity itself would strain supply further, wouldn't it?
Precisely. It adds another layer of demand onto an already tight market, helping to keep prices elevated.
So this isn't just numbers on a chart. It's having real effects on people.
Absolutely. We saw rice import bills jump significantly, over 35% in places like Ghana and Nigeria.
That's a huge burden for those economies.
Massive. And in the Middle East, some price-sensitive markets actually face shortages of affordable rice.
Wow.
Even in a place like Brazil, over in Latin America, which actually increased its own domestic production, they still saw food inflation related to rice running at like 12–15%.
So even producing more yourself doesn't fully insulate you.
Not when the global market is this interconnected and, frankly, this disrupted.
Okay, let's try to sum this up. We've got record global rice production. Good news on the surface, but high prices persist because of a complex mix. India's major export ban taking a huge slice of supply off the market.
That's the big one.
Then worries about future crops due to climate issues like El Nino.
Creating market uncertainty.
Persistently higher costs for fuel, fertilizer, transport.
Yep, adding to the base costs.
Weaker currencies in key importing countries making rice more expensive locally, sometimes combined with reduced subsidies.
Increasing the burden on consumers.
And finally, governments and big buyers stockpiling rice, which further tightens the available supply.
You've got it. It's a confluence of factors, really, not just one single cause.
It really highlights how the price we pay for something essential like rice isn't just about how much farmers grow, is it?
Not at all. Policy decisions, climate events, economic factors like currency, even market psychology, the stockpiling, they all play a crucial role.
It makes you think, doesn't it? About how connected our global food system is, but also maybe how vulnerable it can be to these non-production shocks. Things far away, like an export ban, can directly impact food availability and affordability right where you live.
It certainly prompts reflection on global trade dynamics and ultimately food security for everyone.
Definitely something to keep thinking about. Thanks for walking us through this complex